What's up, everybody? It's Stephen Williams, founder and president of the creditrepairshop.com. Um, got a text here from somebody. In today's video, what I'm going to talk about is trade lines, what to do and what not to do, and do they really help? What can make your score go down even though you're doing everything the right way? There's some reasons why scores can go up and down each month. And then about bankruptcies, a lot of people ask me, can you get a bankruptcy off, and if it's why, if it's something that's legal like that in the public records domain, how is it possible to get it off? And I'm going to go over how it is possible, and then charge offs and write offs. There's a lot of misconceptions about those. When people see that on their report, they're thinking that everything is over, no more, I don't owe no more, they've written it off, they've charged it off. I'm gonna tell you what the differences is on those. So first, let's start off with um, uh, when you do an authorized trade line. Authorized trade line is where, say, you or some companies provide them. They put you on someone else's card. They put you as an authorized user. Now, this is something that I just talked to a customer and they made this mistake. And I'm like, this is not something that you want to do. When you make someone an authorized user on your account, unless it is a child, which this was a child, but I wouldn't even do that. Uh, you don't give them the card, because whatever they do on that card, if they don't pay, you become responsible for it. No matter what, you're 100% responsible for it. You're actually allowing that person to piggyback on your your history of your good use of the card, your available credit line of the card. When a charge is made in that new authorized user's name from your charge account, your credit card account, all of your history will move over to their credit reports. It'll stay on your reports too, but it'll move over to theirs, and then that allows them to get a big, huge jump in their credit scores. I've seen jumps with the lines that we use, 50 points if they have some negative stuff on their reports, to 150 points uh, if they don't, or they have minimal negative information on their credit reports. I'm talking about huge jumps. And then uh, within 2 months, 3 months, 4 months max, these individuals are able to go out and get their own credit cards in their own name. So, and so they're the goal was met on what was needed by having the authorized user trade line placed on their reports. But yeah, they do work. They work very well. I mean, I've never had it not work for clients when we worked with clients and did it. And it does work to get that history on there. And basically, when underwriters look at this stuff, it's a lot of this stuff is being done by computer systems, not done by people. So when the computer sees it and they see that there was some history on their very good payment, very low account balances on that trade line, they automatically approve people. That's just the way it is. They're using AI technology, and this is a way for people to, in a way, game the system from them using AI technology and not using people. It allows this loophole to be able to be used uh, to be able to get people approved and to be able to get them their own credit cards, because they're just simply using computer technology. Not to say that uh, trade lines didn't work in the past, even when they did manual underwriting. It's just that it's making it now to where it's just like one step, 1, 2, 3 when people are applying for credit. The only ones that I see that it could potentially, where there's still some manual underwriting is being done, is with mortgage. companies, but they're not really caring too much about uh, something like that. They're just looking at stuff that's not resolved. But and if you resolve the negative information on your credit reports, and then you have a trade line placed on there, and it boosts up your score, they're just going to be looking at your score getting boosted up. That's all they're going to care about. Um, Now let's talk about some of the reasons why your credit scores can go down, and it can happen throughout the month for various reasons. Some of the times when your score, when you make payments to your accounts that you owe, and they're reporting, sometimes it can crisscross and not be reported 1 month, so it looks like you're holding a higher account balance for something that you've already paid off. Uh, so it could fluctuate. Also, if you did some inquiries 1 month and they approved you for it, for let's just say a credit card, you were approved for a credit card, you did the inquiry, but the approval and the card didn't come to you. It came to you after the rescore or the refresh for your month was done, so they could look at the inquiry and drop your score, and then the next month, after you've gotten a new account and everything established, your score could blow up the next month. But a lot of people, they'll get upset because they're like, I got approved and my score went down. Or they made the payment and their score still went down. And what I tell people to do is just calm down, pay attention to your reports, go look at your past history, and you can see that if you really look at the details, your scores were fluctuating up and down, and you can see how your payments um, were updated to the bureaus from your creditor, that it may be crisscrossed, and that was the reason why it had went up and down. Also, depending on if you have any uh, a lot of new inquiries, or if you've maybe had a late payment, or maybe you had some other accounts, a whole bunch of, or your balances were just too high. Even after you made a payment, you still had your balances too high. And I always tell people you need to keep them 30% or less. Or if you're going to charge a lot to your card, you need to make sure that you pay it down to 30% that month. And then you understand that if that payment does not hit when they report to the bureaus, that your scores are going to drop, but they'll jump back up the next month unless you don't keep that balance at that 30%. You can't charge 1 month high, pay it down the next month, and then charge it up again. And then when they do their when they update their information, it's going to look like you had both months were high, even though you paid those payments off. So you got to watch out on those, because that's what can make your scores go up and down. And I'm looking at my timestamps here. Let's talk about BKs. Um, just got off the phone with a client. She had bankruptcy, Chapter 7. It was removed off of one bureau, but the other two are not removing it. These are outdated bankruptcies. And so some of the times you have to, continue over and over and over again to the credit reporting agencies about taking off a bankruptcy that is outdated, that it should be removed. For some reason, they don't do their job always and remove them when they're supposed to, but you have to keep pushing them to do it. And these are things that you should also do separately. You should not challenge or dispute to have a bankruptcy removed with other information that you're trying to get removed. But now let's look at what a Chapter 7 bankruptcy can stay on your credit reports for 10 years. Chapter 13 bankruptcy can stay on for 7 years. But these are the technicalities that can get these removed. Number one, we never challenge a bankruptcy stating that it shouldn't be on someone's reports because they didn't file bankruptcy. That is not the way that you're supposed to do it. what you should do is you could get your credit reports and you can look for technicalities on the way that they place the bankruptcy on your report. I figured this out a long time ago when I was looking at people's credit reports and they did not have the case number on a bankruptcy. That's an inaccurate statement. They didn't have the accurate date of the bankruptcy. They didn't have the accurate what. Hold on one second. I'm going to open up one of the files so I can give you this information 100%. Okay, what you should look for, I went ahead and opened up one of the ones the one that I'm going to be helping work on today, is number one, the date file. Date file must match the actual date file. Number two, was it showing that it's discharged, and was it discharged or was it dismissed? Number three, the court. Is the court information the correct court information on there? Number four, some of them may say reference number, but the court case number cannot be blank. It must have the correct number. Looking at this one right here, already on the Equifax, and we've gotten it removed off of the TransUnion already. On the Equifax, it does not have, it's missing missing the bankruptcy discharge statement is incorrect. The bankruptcy court information is inaccurate or incomplete, and the reference number or the case number is incomplete. This here would have to be removed because according to the Fair Credit Reporting Act, everything, regardless if you owe a debt or not, regardless if it was a case or not, regardless if it was a bankruptcy or not, it must be 100% accurate on your report. Must show 100% accurate on your reports. Period, point blank. It has to do that. This here will come off of her reports, and she will not have any bankruptcies on there at all. Also, I believe 2 years ago, there was an agreement that was made with across the board with all the credit reporting agencies about having public records history on credit reports. And in certain circumstances, they were not supposed to be reporting the public records history anymore on any people's credit reports unless it was something that was fresh, maybe 1 year, but nothing longer than that. But we're still finding that some people's reports still had that information, and that stuff must come off. Okay, next, let's go. I'm just putting my notes here for when I'm getting to this one here. Let's talk about charge-offs and write-offs. Never a day goes by either on Facebook, YouTube, or an email where someone contacts me. Hold on one second. I got to answer this one. Okay. Where someone doesn't ask me this question or they make this statement. I'm looking at my credit reports and it's saying that the debt is charged off or written off. And what people are doing is they're thinking in their own mind, if somebody says it's charged off or written off, in my own understanding and definition of those words means that it's over. Like you've given up. I've written you off. So that means that I'm not coming after you no more. It does not mean that. This is exactly what it means. Lenders have accounting rules that was established by the bank, number one, banks, but also by the federal government. So investors and also people know how strong a bank really is. And so they require credit card companies and banks and lenders after a 6-month period of time that they must write off or charge off inactive accounts, because if they didn't, it would make it look like they had more assets than they really do. Even they would be keeping dead accounts in their accounting just to show that they have these payments coming in, but they would be able to manipulate it in not, even though they're not getting payments, they would manipulate that as an asset. They can make their books look better than they really are. So what they've done, what they make them do is after 6 months, they must write it off and put it into another category for their accounting, into the bad debts. Now, I've had other videos where I talked about when they do that, they also sometimes get paid for doing that, for having insurances. Some of these companies know that they're dealing with either accounts that could potentially go bad because of the grade of the credit that they were, like they have these different grade A, B, C, D credit ratings, and some of those subprime C and D credit approvals that they've given people, they know that they can go bad, and when they put them into that category, sometimes they've had insurances that back up and will pay them, and then they'll sell the debt. But we're not going to get into that in this video. I'm just letting you know that if you have a charge off and a write off, everything has not ended just because they've done that. If a company writes off a debt to you, like let's just say you had a credit card, it went bad, they wrote it off, you see that it's a fresh write-off, what you should do instantly right away is you should write them and try to force them to actually do a 1099-C and do a debt cancellation. What you could do is send them a letter and say that you have total financial hardship, I'm not going to be able to pay this, there's absolutely no way. Would you consider writing off this debt as a debt, forgiving this debt and put it in a debt cancellation and sending it into the IRS as a 1099-C? You'll be surprised how many companies will just do that. They'll just do it. Some of them won't, and they'll end up selling the debt, or they'll try to have a debt collection company come after you. But even if they have a debt collection company come after you, and this is a fresh charge off or write off, you can, and they're paying the debt collection company to come after you, not where they've sold the debt, you can mention that to them on the phone. You can send that to them in writing, send it to the company, still send it to the company, and you'll be surprised at how many companies will decide to just do a debt cancellation. It's because for some reason, when the company holds the debt and they pay a debt collector to collect the debt, and you notify the debt collector's already been paid money. They get paid from the company directly. They don't get paid any money for collecting it from you. It's not a paid per performance with most of these. So they'll notify them and say there's no way that you're going to get this money. And for some reason, sometimes when the debt collector contacts the original creditor and lets them know that, they just say, take that off, we're sending that one back, and they end up doing the debt cancellation on there. So, but to be clear, when you have a charge off and a write off, it does not mean that everything is ending and that it's going away. It's just put into a different category for the accounting of the business, but it's still an account that they can try to collect, that they can sell, they can do all types of stuff with it. All right, so if you need help with your credit, please visit our website, thecreditrepairshop.com. If you need your credit reports and scores, visit the3scores.com. I really appreciate it. If you have any questions, please post your questions and comments here on YouTube, or you can send it to me in email. make sure that you say YouTube subscriber in the subject box, and then that'll be forwarded over to me. And if you need a authorized user, you need Tradeline, there's a link below this video also for that, and we can help you with that. They do really well. You can see your scores go up within 23 to 25 days. I mean, it's a very fast process. All right, this is Stephen Williams, founder and president of thecreditrepairshop.com. Please like this video. I forgot to say that. Please like it so we can bring more people in to get this education. Please subscribe to the channel also. Thank you, and until next time.